Bloomberg Audio Studios.
Podcasts, radio, news.
Well, I think about 50 to 60% of CRE debt is held by the CMBS market. So that's an investor problem. That's not my problem. That's somebody else's problem. And then maybe 40% is held by banks. Very little of that is held by large banks as a percentage of their assets. You know, some regional banks have significant risk, and it's a problem. But, they're able to pull shtick. You know, as we always like to say in my business, a rolling loan catches no loss. I mean, they just roll it until they can't roll it anymore. So, commercial real estate is a problem that's sort of glacial in that way. There'll be restructurings. Banks will have issues. Some regional banks, I don't know if any regional banks will go under or not, but it's not a systemic issue.
If I think about the biggest problems facing us, unfortunately, I know that you don't care that much about the federal deficit and debt.
Yes.
But how come? If we're paying more than $100 billion a month in servicing costs,
I'm going to take out my violin, okay?
But more than we pay for the military.
Okay,
so
can I let me say a couple of things. Number one, I'm going to put you in the camp of what I like to call the oi the deficit crowd.
Oh. Yes, I'm there. I'm right
You're
there. Me and Lisa
So
Bromwich.
I'm not an economist, but I understand arguments. And literally every single word that people are uttering about the deficit today has been uttered by somebody for 40 years. Now, in my business, being too early is being the equivalent of being wrong. But I've been a year too early, I've been 2 years too early, I've been 40 years too early. So clearly it's more complicated than the deficit people like to say. Is there a point where it becomes an issue? Sure. But you know how you'll know? Instead of on a day like today, where the 10-year is down, how many basis points is it down?
About 11.
Just 11.
Just 11.
You'll walk in, and it'll be up 50, and you'll say, you're the deficit. And then it'll be relevant.
Yeah, but Steve, this is exactly the same as housing, right? At some point...
40 years. 40 years. Long time.
Yeah.
It's really just a very, very long... And the argument as to why I think it's just not that relevant... Excuse me, my earpiece fell out.
You don't need your earpiece.
Is that... it has to be that the fear about the deficit causes people to start to walk away from the dollar. That's the feedback loop. So let's think about that for a second. Why is the dollar the reserve currency of the world? It's actually very simple. Big money has to park its money somewhere. And they're only going to park it in the most liquid, safest bond market in the world. And that's the U.S. government bond market. Until there's actual replacement, the U.S. dollar will be the reserve currency of the world. And what you're talking about is just going to be academic. It's not China. It's not Europe. No offense to all you crypto people. It's not going to be crypto. So until somebody can show up and show me some replacement for the U.S. government bond market, I'm just not concerned.
And it remains to be seen if that'll happen in the next 40 years. But before we get there, I do want to talk about the state of shorting. Of course, you were in The Big Short. Steve Carell played you. Great movie. But it feels like this environment...
That's on my tombstone already, by the way.
It's already carved in.
It's carved in.
It's funny. But in any case, it feels like the state of shorting in this market. This just feels like an environment where companies won't die. And you see these high valuation, high flying stocks, and it just feels like there's a lot of temptation out there to short. But how are you thinking about short selling?
I don't short for clients at all. I short an itty-bitty little bit for myself once in a while. What I would say to people is, number one, a couple of rules about shorting. Shorting a stock purely because you think it's expensive is a death wish. You have to have a fundamental reason to be short a stock. Is NVIDIA expensive? Yeah, it's expensive, but earnings have tripled. So, you could have made that argument a year or so ago, and then earnings doubled or tripled, whatever they did. So, I think the economy is fine. Is it slowing a little bit? Sure. Are delinquencies up a little bit in consumers? Okay. But there's no fundamental case to be massively short things. I mean, are there individual stories maybe you could short here and there? Sure. But to go after the market, I think is insanity.
But we have the DOJ going after short sellers. I mean, don't they serve an important purpose?
They do serve an important purpose. I don't understand why the DOJ goes after short sellers.
The other thing, too, I believe you were once short Tesla for a certain amount of time, too. What were the lessons learned there? Because you've seen so many people get squeezed on trying to short that stock in this market.
I've been shorted. I haven't been shorted. Look, I think you can at times short Tesla when the fundamentals are deteriorating. And then people stop focusing on the fundamentals and they start talking about the dream of auto taxis or AI or whatever, and then it becomes impossible. So Tesla's not a stock to be short long term at all.